Welcome to the very first episode of Equity Mates. My name is Bryce and this is Alec, otherwise known as Ren, and we are so excited to be here.
That's right, Bryce. We are the founders of Equity Mates, one of Australia's biggest finance podcasts, and for the first time ever, we're stepping out from behind the microphone and in front of the TV cameras.
That's it, Ren. Usually we love talking about big industries that are going to be changing the game in the next 20 years, and that's what we're going to be sort of bringing to this show. Markets have just closed, so we're going to be taking a step back and looking at the bigger picture.
That's right. We'll be speaking to some of the best money managers in Australia, breaking down some of the stocks and industries that we love, and really just trying to learn more, because neither of us are finance professionals. We're here trying to learn more, and we want to take you all on the journey with us and learn more about the big world of finance.
So Ren, we're going to be breaking down the investing world from beginning to dividend, and just like we do every year, we are going to be starting off with some of the bold predictions that we have for 2021. A bit of fun to kick off the year. 3 bold predictions each to start us off.
That's right. We introduce it by saying we're going to learn a lot, and now we're going to make some big and bold predictions that may not be the most sensible predictions, but they're a bit of fun. We love doing it on the podcast, and we thought it would be a great way to kick off the show. So 3 each.
Yep.
Do you want to kick it off?
Would love to. It would be my pleasure to start the bold predictions with a non-equity related asset, and that is Bitcoin. Bitcoin has absolutely been flying, and it would be remiss of me not to mention it. So I think, Ren, 2021 is going to be the year of Bitcoin.
Okay, and what do you mean by that?
So Bitcoin is currently trading at around $35,000 US.
Yep.
I am predicting, and this is a bold prediction, but I think we're going to see it hit $90,000 or above USD. Yes, that is up 300% thereabouts, but look, I don't think that's impossible.
Look, if it hits $90,000, I think I might have to delete Twitter.
True, Twitter
the amount of Bitcoin Twitter, how loud it will be.
Twitter would blow up. But a couple of the reasons for this, it is seen as a hedge against inflation, and whilst we're not necessarily seeing a lot of inflation at the moment, we are seeing significant debasing of the currencies with all of this money flooding into the markets and into all the money printing that's going on. Bitcoin is an asset that is seen as a way of protecting that. And also over the last sort of 6 months or so, we've seen a number of the larger Fortune 500 companies start to buy into it. So
fair enough.
Demand is going to be there.
I don't want to have this episode devolve into a whole crypto conversation, so I think we leave it there.
Yeah.
Your first bold prediction, Bitcoin to hit 90,000 plus by the end of the year.
What have you got?
So I'm going to stay on the trend of money printing and debasement.
Yeah.
In 2020, the US Federal Reserve's balance sheet went from $4 trillion to $7.4 trillion. I'm going to say by the end of 2021, it'll hit $10 trillion.
Wow.
Yeah.
And what impact do you think that's going to have on markets?
Well, I think markets are looking quite overvalued at the moment, especially the US. There's a lot of zombie companies, a lot of unprofitable companies out there. And the Fed knows now that when markets get shaky, what do? They fire up the printers and they print money and buy bonds. And it's worked before. And if markets get shaky this year, they've got one big tool in their tool bag and they'll pull it out, I reckon.
Absolutely. If they do, though, I think the lesson from last year was if they fire up the printers, go long equities, because those things, the markets just, go nuts. So,
all right, what's your second bold prediction?
Second bold prediction for me, Ren, is around one of the companies that you really love and that IPO'd towards the end of last year, and that is Airbnb. My bold prediction is that Airbnb is going to have a market cap greater than the 5 largest hotel chains in the world.
I like this prediction. I like it a lot. All right, so give us the context. What are the 5 biggest hotel
incredibly
chains?
Bold given the market growth that it's going to have. But we've got Marriott, Las Vegas Sands, the Hilton, Huzhou, apologies if I pronounced that wrong, but that's a Chinese hotel conglomerate, and the Intercontinental. Total market cap of $234 billion.
Okay.
Airbnb is currently sitting at $104 billion.
Okay, It's not out of the question.
If we see a little bit of a rise from Airbnb and a bit of a fall from those 5 hotel chains, then it's all possible that Airbnb could could beat them. But I just love this company, the moat that it has in the industry at the moment, particularly obviously the hotel industry. No one sort of says, have you got yourself a Marriott? They say, have you got yourself an Airbnb?
Yep.
I just think it's a fascinating company. It's hot in the market at the moment, and go Airbnb.
Yeah, I mean, I've got two quick thoughts on Airbnb. The first one is people our age, they're not searching on hotels anymore. All of our searches are starting at Airbnb, which is an incredibly defensible position. The second one, though, is they've tried to do a lot of satellite businesses around this core product that's incredibly strong. A lot of them haven't worked that well. So that's going to be a really interesting thing to watch with Airbnb. And you might need one of those satellite businesses to really take off for you to get that bold prediction right.
Fingers crossed. So, Ren, your second bold prediction?
So I'm going to stay on the US tech theme. I'm going to say that DoorDash, currently valued at $60 billion US, will have a bigger market cap than Uber, currently valued at $105 billion US.
Wow.
Yeah.
Okay.
And look, I can go deep on DoorDash and why I think it's a great business. I think maybe we'll do a separate episode on that, because otherwise I'll just waffle on. But DoorDash, between January 2018 and October 2020, grew their market share from 17% to 50%. They're doing some really innovative things, a little bit different to the Ubers and the other food delivery businesses out there. So I reckon Uber might slide a little and DoorDash might increase a little. And I'm calling that by the end of the year, DoorDash is bigger.
Awesome. Looking forward to seeing that play out. To close out mine, Ren, a massive IPO that is coming in the States in 2021 is Roblox, one of the largest sandbox games in the world at the moment. Bigger than Minecraft, 164 million users per month, $500 million in revenue. Looking forward to seeing how that pops. And that will be measured from its IPO date to the end of the year. Nice. IPOing very soon.
I don't know much about Roblox. I'm interested for you to break it down in a future episode, because you told me a stat earlier that 3/4 of US children between the ages of 9 and 12 are playing it.
Yes.
I'd never heard of it.
Yeah.
So let's put a pin in that
you're
conversation,
not 9 or 12,
because we'll
so.
come back to that. Last one from me. My final bold prediction is that Netflix will end the year down.
Okay.
So for me, I reckon we're reaching an oversaturation point with the number of streaming services out there. There's so many that now, if you bundled all the streaming services together, the cost is actually higher than cable in the US or Foxtel in Australia previously was. So I think something's got to give. Netflix has been taking out a lot of debt to fund all of their content over the years. And I think if their growth slows, the market might start to look at that debt a little bit differently.
Nice. Well, there you go. Those are our bold predictions for 2021. But we're going to be bringing in an expert now to talk through his bold predictions for 2021. So stick around. We'll be with you in a sec. This is Equity Mates, and we are joined in the studio by Andrew Page, who is founder of strawman.com. Andrew, welcome to the show.
Hey guys, good to be here.
So we've brought Andrew on because we're going to try and get some bold predictions out of him. But before we do that, Andrew, we know that you have a view on, I guess, the perils of short-term bold predictions for investors. So are you able to just elaborate on that?
Yeah, I would probably be a little facetious and say it's not a view, but really a well-informed, fact-based sort of opinion on it. And it always sounds so controversial when you say it. And what I'm going to say is, I think short-term predictions are pretty nuts. And I say that not just to be difficult, but there is decades and decades and lots of different markets of history where lots of pundits are making these calls, and they're always wrong.
Yeah.
They're almost always wrong. And when they're right, it's probably because they got lucky.
Yeah.
So back in December 2019, they had the consensus forecast for the S&P 500, 2.7% rise. And what happened? We had COVID, there was a 30% drawdown, and the market ended up 15, 16% higher for the year at a record high. No one saw that coming. And even if you had traveled back in time, I would wager and said, by the way, there's going to be a global pandemic next year. Unemployment's going to hit records, not seen in generations. Big swathes of the population are going to be hand to mouth. But the market's going to go up 17% hit a record high. You're dreaming.
That would have been a bold prediction.
You know what I'm saying? So it's kind of like, and I've been doing this game for long enough to know, as year after year after year, it always happens. And yet, at the start of each year, we always say, hey, what do you think's going to happen this year? It's like, after a while, it's like, fool me once, fool me 4,000 times, shame on me type thing.
Yeah.
So just... not a firm view, but there's one for you.
Now, look, we hear you, but they may not make good predictions, but they make great content.
They do.
We've thrown some out, and we want to hear some from you. We won't call them bold predictions. After that, we'll call them bold guesses.
Half-assed guesses.
Yeah.
Let's go with that.
But we want them to be bold.
And I think we've got to be. We're talking a bit off air about this, and I think we've got to be realistic, because if you're an investor, you are making predictions. So there's no way of going around that. So it's silly to sort of say all predictions are useless. Oh, but I'm a self-directed investor that picks stocks. You have to make predictions.
Yeah.
So I think it's more a question of being smart about the kinds of things you're trying to predict and the timeframes that you are trying to predict over. So it's one thing to sort of say, I think BHP's quarterly earnings per share figure is going to be this to 12 decimal places. I'd say it's probably pretty stupid. Even more stupid to say I think the share price is going to be at this exact target in 2 weeks. But if I was to sort of say, listen, I think over the next 5 years, a business of this nature probably on average will grow its earnings at a mid-single digit kind of rate. Well, that's a much easier prediction to make. And that's where you should spend your time. It's more about being generally right as opposed to specifically wrong. So let's put that out there as well.
Do you, at the start of the year, then keep sort of checking in on those sort of if 5 years is the period of time, do you review what your prediction may have been 12 months ago?
Yeah, I think for me, it's not so much when we're a certain point around the sun. It's more about whenever the company gives me more information.
Yeah.
So there's a working hypothesis, and I think you approach it like a scientist. Like, this is my best guess with the facts that I have available. And then the facts will change, and they will change all the time, and they'll make you look like an idiot all the time. But a company will come out and they will give you more information, and you need to refine that. So usually it's around reporting season, but often outside of that as well. So whenever you get that new information, that's when you should go back, dust off any sort of forecast valuation, and just tweak it if necessary.
Nice.
Well, look, we've got the sensible answer out of the way. I'm pretty keen to get the not so sensible predictions. So, do you have a bold guess for us?
I do, and it's going to be contentious. And I've made a similar view on this before, and I've been so thoroughly wrong as to not be funny. But my bold prediction is that I think Afterpay will at least halve in 2020.
Wow. You've just lost half the audience.
Please don't send me any hate mail.
Yeah.
The market will...
Strawman.com, directed to him, not to us.
It ranks, Afterpay ranks really well on Strawman.
Yeah, I'm sure it does, yeah.
So there's a couple things to note here. I think Afterpay is a wonderful business. And there's the share price, and then there's the business. The business is growing like the clappers. It's a phenomenal business. However, shares, the company's now worth more than Telstra. I mean, its market cap has just exploded. It's on, I had to write this down. The price to sales is at 80 times, right? Wow. So Afterpay is, everyone talks about how ridiculous Tesla is. Afterpay's gone up a hell of a lot more than Tesla in the last year. Tesla is on a price to sales ratio of 30. Afterpay is on a price to sales ratio of 80.
Wow.
80 times sales. So that's up there, okay? And so I looked at the forecast from the brokers. They're actually expecting Afterpay to make a profit this year. And then over the next couple of years, they're expecting that profit to 6x. So, so there's the argument. Yes, it's very expensive, but it's going to grow extremely strongly. Yeah. And I think it probably does. But if you look at the PE based on the forecast for FY23, so not the trailing there, it's 176 times.
Wow.
Right? So that's full. Let's call that. And it's a really nice analogies from history. So the .com bust is very illustrative here. A lot of companies just, they had a .com on the end of their name, and there's never a business there, and it's easy to laugh at. But there was a lot of really great tech businesses there that not only were around at that time, but flourished over the period. Apple's a good example. It was around
Amazon.
there. Amazon, Microsoft. So Microsoft between March 2000 and 2015, its sales grew 4x over that period. So this business not only survived the .com crash, it thrived in the intervening periods after that. But its PE was 65 at the peak of the .com bust. 65 seems really low in today's. We're talking about Afterpay, which is on a price to sales of 80, right? And this is Microsoft. And Microsoft's, as I said, sales grew incredibly strongly over that time, and yet it took you 15 years to break even. So my thesis is at some point the hot money, the hype will go out of this. I think it'll fall back. I think it'll actually be a wonderful opportunity for those who are long-term investors. But that's the other lesson from history. Even the best businesses that do go on to score incredible shareholder gains, it's never linear. They all have these massive pullbacks. And generally speaking, people are new to the market. They pile in when things are super high. And the second that it falls 10, 20%, they freak out. And I would argue you do the opposite.
Well, that brings us to the end of our episode on Bold Predictions. Andrew, thank you for joining us on the show. Very much looking forward to seeing how that pans out. For a lot of investors, it's not going to be good news, but as you said, a really good opportunity to get into.
It's probably not going to be good news for me when we review this. Let's be honest.
So if you'd like some more information on Equity Mates or to leave us with a bold prediction, head to equitymates.com and you can find out more. But loved having it. And
make sure you tune in tomorrow to hear us break down the electric vehicle industry. And then we'll have two experts on debating the bull and the bear case for Tesla.
Awesome. Can't wait. We'll see you tomorrow.